What's going on, guys? Today we are going to talk about inflation. We're going to start with the definition for inflation. Then we're going to jump into what are we seeing right now in the market. There's a lot of different things going on. We're going to go over the good and the bad. And then finally, we are going to take a look at how I personally think this inflation and everything kind of going on right now is going to affect the stock market moving forward. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. First up here, we have a boring definition for inflation. So this is Investopedia. They are a great website for basically any information that you need about investing. It has a lot of good definitions on here. So real quick, inflation is the decline of purchasing power of a given currency over time, a quantitative estimate of a rate at which the decline in purchasing power occurs can be reflected in the increase of an average price level of a basket of select goods and services in an economy over some period of time. The rise in the general level of prices, often expressed as a percentage, means that the unit of currency effectively buys less than it did in prior periods. So typically we're looking at inflation when they're talking about periods, they're talking about a year. So we're looking year over year. So right now we're in the month of April. So we will basically compare April's basically inflation rate compared against of 2022 compared against April inflation rate in 2021. So that's important to understand, is basically that it's a comparison year over year. So we're not comparing, all of 2022 so far versus all of 2021 so far, or that has already occurred. We're comparing month by month is often basically what they're doing. And that's often what you're hearing when you're seeing like headlines of, inflation's up 8%. That's comparing basically what we're seeing right now for a basket of goods is 8% higher than what we saw, a year ago for the same goods. So that's really what it's important to understand and important to, get a grasp of when we're talking about things like inflation. So now let's jump over and actually take a look at what's going on right now, the good and the bad. Up here, we have basically inflation. So why inflation may have already peaked. So this is kind of an article going over the good side. They touch on the good and the bad, but it's mainly focused on the good in this article. But I do think they have a lot of good points about where inflation is heading in the future. So right now, they're saying the bad is the consumer prices have risen by a shocking 8.5% over the past year, a rate of increase that has not been seen in more than 40 years. So again, that's 8.5% from basically, this is talking about the March number that was just recently released compared to March of 2021. So 8.5, and we're going to take a look at something that's kind of not really considered and not really looked at very closely, but obviously 8.5 is a huge number, especially since we haven't seen a number like that in 40 years. So the good news is, at least according to them, that this number is probably gotten as high as it's going to go, and it's soon going to start coming down. So we're going to again take a look at why they're kind of backing up this claim. They go into a little bit more in this article, and here's one of their points. So the headline inflation figure, which spiked by 1.2% alone in March, has been driven overwhelmingly by energy prices. Core inflation, which excludes food and energy, was relatively subdued, rising by only 0.3%. So obviously that's significantly lower than the 1.2%. So basically what they're stating here is that oil prices, gas prices, and then a little bit of food has really driven up a lot of these costs. And what they get into here is basically why that's driven up the cost. So right in March, we saw oil prices spike very, very high, and they peaked at $124 on March, $124 on March 8th. Well, now oil prices have fallen all the way down to $94. So that's a $30 difference alone right there, right? Basically like 30% is what you're actually seeing there. And that's huge. That's obviously going to have a huge effect on, what inflation looks like, even though it's a very short-term thing. Like you can see how oil prices have already dropped down by $30. And then they also touch on gas prices. So gas prices have followed a similar trend down, basically where the US average price right now is at $4.08, which is down 6% from $4.34 in early March when oil prices were spiking. So those two factors alone kind of contribute and show how basically, these goods and services that are bundled in with this inflation number, that are considered in this inflation number, have already fallen significantly in the last month. And you could start seeing basically a back trend just from that alone in inflation. So here we have another key point. So they're talking about be smart. I didn't actually highlight this portion, but be smart. Base effect matters when you're looking at year-over-year inflation numbers. So right now we're reaching the end of the period in which we're comparing prices that were artificially depressed by the pandemic, and we'll soon be comparing against numbers basically that were hitting artificial highs thanks to global supply chain constraints. So basically what they're saying is we originally, up until like the last, this next month and over the next kind of few months, we had a year ago prices that were all, basically depressed down because of the pandemic. People weren't buying things, there wasn't a lot of money velocity in the economy. So prices were staying low. But then over, this period last year, what we saw is prices start to soar. And as prices started to soar, we saw inflation creep up. So I'm going to jump over here to a chart basically showing the same thing. So this is showing inflation over basically the last few years, since 2015, and I can shrink this up even a little bit more just to get a better picture in here. So we can see 2020, 2021, we saw inflation under 3%. And then here, this is April of 2021, we saw inflation basically jump up quite a bit. If we go back to March, we're still under 3% for both of these numbers, and you can kind of ignore them. I mean, you can consider whichever one you want. We're seeing 2.6, it's for all items, and then there's 1.6 for items minus food and energy, basically is what the red line is. So March, you see, right, both the numbers are less than 3%. And then we jump into April of 2021, and we're seeing that both these numbers are now, well, the red line is slightly below 3%, but basically 3% or higher for both these numbers. So what we're going to start to do and see in April is we're actually going to be comparing these basket of goods basically against more inflated numbers. So this is exactly what they're talking about, right? The cost of those goods at this time in April of 2021 was much higher than in March. So that last inflation number that we saw is really the last number that you're seeing where we're comparing against kind of before all the money printing kind of started actually affecting the economy. So now this April number is actually going to be the first very interesting number, because we're going to be comparing against a time period where we actually started to see this inflation. So the question is, right, are we going to see inflation still continuing to go up, or are we going to see this number drop significantly? Which, in fact, based off the fact that we're going to be comparing against we have a 4.1% number here, we should see inflation actually start to turn around and basically have this be a peak and start to reverse its trend and head down a little bit. If we see inflation going up still, that means we're in a very, very bad position, because basically we could have gone up, we'd have to go up 9% year over year from a number that's already very highly inflated. I don't think that's reasonable and likely to happen. I think what's likely going to happen is we're going to see inflation numbers that are coming down. I think they are still going to be higher. You might see, it drop down to like 6%, but I don't think it's going to be, as high as we're seeing it around this 8.5%. So down here, they then go into why they think, inflation could possibly keep going up. And what they're talking about here is, so any declaration that inflation has peaked is necessarily provisional at best. This is written by Joe Brussels. I'm not sure exactly what his role is, but what they're saying is that there's a lot of volatility in the market, unpredictable oil markets, and there's wartime kind of things going on right now. So there's still a lot of volatility, and obviously that could have a huge effect on inflation. If things kind of ramp up again in Russia, and we see Europe and other countries start refusing to buy oil from Russia, that could put a strain on the oil supply and overall affect the inflation numbers. So that's just a certain factor, but again, that's a very short-term thing that they're kind of stating there. So personally, I don't see it as a huge concern. But the Fed, the rates keep on going up and they keep trying to target 2%. So either way, even if we drop down to, that 6 level, 6, 7 is what they kind of have listed here, that's still significantly higher than what the Fed is targeting. So they really, need to basically, they're going to keep raising rates. They've stated it multiple times. They're going to raise rates over the year and try and basically get that more under control. And then here's kind of another positive that they threw in here. So we're already seeing, some of the higher interest rates actually affect the mortgage market, where some mortgages are now even at 5% mortgage rates. So that should help, slow down home prices and buying and things like that a bit, which will, in turn help that inflation number. So overall, those are kind of a lot of factors that should be considered and thought about when you're thinking about inflation and kind of how things are going to go moving forward. So the final question and final point that we want to talk about is, how do we actually see this affecting the stock market? We've seen a ton of volatility and there's a ton of stuff going on that's, negatively impacted the market, especially over the last week. We've seen, things kind of drop out and then finally got a green day here today where it's kind of bounced back a little bit. But the question is, where do we see this going? And especially, where do we see it going long term? And in my opinion, this is purely my opinion. So obviously, take all the facts and formulate your own opinion. But I don't see this lasting a whole lot longer. I think as these numbers, start to come out, I think the inflation concern starts to fall off. And I think, as the Fed starts raising interest rates, which again is another thing that kind of the market's been concerned about, but a lot of that has to have been priced into the market. What you've seen is, they've announced it. They've been very transparent about where they plan to go with rates. They're trying to get basically back up to, a 1.5%, federal interest rate, which isn't unreasonable. It's levels that we saw, before pre-pandemic. So there's no real, concern there. It's really just the market reacting to it in a negative way and thinking that it's going to have a drastic effect on the economy, which it could, but personally, I just don't see it. We're kind of, again, going back to pre-pandemic levels, which we had a very strong and stable economy before. So, there's no reason the market can't keep going up. So as we kind of see things elapse, I think a lot of these things have been priced into the market. We can't continue, we can, but it's unlikely that we continue to keep reacting in the same way over the same news, right? We've seen that inflation is high. Everyone knows that inflation is high. Once April numbers come out, the question is going to be, how much does it drop is really what I'm going to be looking at. And I think overall, people are going to potentially start pricing that in. The article that we went over, that shouldn't be any new news to anyone who, is big in the stock market and pays a lot of attention to, global economics. So the question is, right, when do people start pricing that in? And really, I think the only thing holding back the market right now, because I think a lot of these other numbers have been priced in, inflation, interest rates, things like that. The only real thing holding us back right now that I see is obviously everything going on in Ukraine and Russia. And, there's been a lot of different kind of things going on there and things that could negatively affect the global economy. But overall, it kind of seems like that is even fizzling and starting to fizzle out. So obviously, heart goes out to the people in Ukraine, but hopefully things kind of turn around and things can become more stabilized. And I think once that happens, we see the market react, in a very positive way. The big question mark that will come up over the next kind of few weeks is, where are earnings at? So if earnings continue in a positive trend, I think we see the market start to turn around in a very meaningful way to the upside. If earnings come out and they're very poor, then obviously we could see that would be a different factor that we haven't seen before that could actually negatively affect the market. So that's kind of my take on things. Obviously, like I said, go through the facts and look everything over and kind of consider things for yourself. Overall, I'm long-term bullish, so I always buy. There's no time I'm ever, purposely trying to sit out of the market. It's just a matter of how scaled into the market am I. So right now, I'm very bullish, and I think there's a lot of room to the upside. So that's kind of my stance on things. But I'd love to hear your stance. So if you would like to, I'd love to hear it down below in the comment section. I'd really appreciate any comments, and always try and reply to them. So also, if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Otherwise, have a wonderful rest of your day.